this is smart?
I think so. You know, there were some analysts gnashing their teeth when this was first made public. And by the way, we had the scoop.
Congratulations.
Thank you. And I think we might have forced the company's hand last night, by the way. We had the scoop on the buyer, and they pushed out an announcement this morning. But anyway, enough congratulations and backpats.
Boeing says thanks, Julie. But go ahead.
I know the people who stayed up all night on that release are probably not loving us today. But anyway, yeah, you know, Carol, that's such a smart question. I think under the circumstances, people, and especially given that the price is almost double what people were projecting, you know, a few months ago. I mean, Boeing, so I think this is going to be seen as a good move, all in all. But I think definitely, you know, there are people who wish Boeing had hung on to this. And one other thing that was tucked into the release, and hopefully there'll be more details on this, but I think Boeing struck a really unusual agreement with Thoma Bravo, the buyer, and they'll maintain some rights to some of the digital, you know, some of the information flowing through the apps that are going. So I think they'll have a chance to study user data and you know, intellectual property is valuable, and I think other buyers might not have been willing to give that to Boeing.
Julie, what other transactions do we need to have on our radar right now? The Spirit Aerosystems acquisition that happened over the summer. This Jepson one, this sale is happening now. Are there other parts of the business that are going to be shed? Or is Boeing going to look to bring anything else back under its umbrella?
So one real quick answer on that. I think, you know, some of this is still TBD, but we're really interested to see what they do with space.
Okay.
And they've been very, you know, circumspect when it comes to Starliner, which is the troubled spacecraft. Even as NASA has, you know, charted out months of tests and, you know, plans to maybe put the next capsule into the air. Boeing's not saying a whole lot, and so that's really interesting. And the SLS rocket, which is the massive and like massively expensive rocket that, you know, was sort of the last echo of old space. And I think Musk, you know, would love to see that go away. So we're keeping a watch on space, and then, but I think the company has sort of indicated that they're not doing a huge fire sale, which is what we'd sort of thought at the outset. I think they're just going to pick their spots, and maybe some businesses also get shut down. And can I just point out a weird, you know, circle of life situation with Spirit? That was Boeing's largest divestiture at the time, and that was 2005, so 20 years ago. And I think I haven't had a chance to go, you know, look at it, inflation-adjusted numbers, but I think this deal today eclipses the Spirit acquisition, and it will help finance Boeing bringing Spirit back into the fold.
Oh, okay.
You kind of need a little bit of a whiteboard, but I get it. But you're right. But it's like, you know, they're trying to figure out their way forward, right? And the money that they maybe need to do it. And so it's kind of interesting to see the pieces being moved, if you will, by the new CEO, who we know, right? Investors are watching really closely to see where it all goes.
Exactly.
Really, really good stuff. Thank you so much. And gosh, wait, does the company actually report earnings tomorrow?
Oh, yes.
So just in our last 30 seconds, top of mind, what's the numbers that you're going to be watching out for? Because it is before the market, so it'll be early.
She's going to have to stay up all night because she's in LA this
Boeing's
time.
like,
We're getting back to you, Julie.
Alarm.
What's the number one? Yeah, quickly.
The number is 38, and that's 737 production. Let's see how close they get to that number, and we'll know more tomorrow.
All right, great stuff. Julie, thank you so much.
And congratulations on the scoop, Julie. Huge news.
my colleagues did the heavy lifting.
Well.
But yeah, happy to help.
Cool stuff. Julie, thank you so much. Julie Johnson, she's Bloomberg News senior aerospace reporter. And as we mentioned, we have seen shares of Boeing just bouncing around a little bit, slightly lower at one point during the day, but still up about 1.9%, Tim.
Well, stock's still up. The S&P 500 up 2.3% off its best levels of the day, up as much as 3% earlier in the session. The Dow up 2.5%. The NASDAQ composite up 2.6%.
All right, folks, and we've got about 488 names to the upside, 15 lower. We're going to get some of the stocks on the move when we come back on Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, just watching the trade for you on this Tuesday, and a little bit of volatility, but we've been in the green really throughout the session. Still up about 2.5% on the Dow, 2.5% on the NASDAQ 100, 2.4% higher on the NASDAQ 100. We've been a little bit higher. As I said, we're off our best levels of the session, but nonetheless, green across the screen.
Yeah, Bloomberg News reported that closed-door comments by Treasury Secretary Scott Bessent, who said that tariff standoff with China is unsustainable, and that he expects the situation to de-escalate. We saw stocks move higher after that report. Then later, White House Press Secretary Caroline Leavitt in a news briefing said that progress is being made on trade deals and that the, quote, ball is moving in the right direction with China.
Let's take a look at some stocks on the move this Tuesday. With us is Bloomberg News equities reporter Alexandra Semenova right here in studio. Got a lot to choose from, certainly to the upside. Where do you want to start?
Yeah, so a lot of green on the screen, but one company in particular that is doing quite well today is 3M. This, of course, is the company that manufactures various products across the economy: materials, adhesives, home cleaning supply, medical supply.
Post-its.
I was just going to say, I thought you were going to lead with Post-its.
I am a Post-it queen. Just come to my desk and they're all
Honestly,
over the place.
you can't even see one of the monitors. This is not a joke. You can't even see one of her monitors because there are Post-it notes all over the monitor.
times
It's
I'm
like, what's the point of the computer monitor if it's covered with paper, Carol?
There's times I'm like, wait, what time is it? Oh, wait, I can't see, so let me move the Post-its.
Well,
but go ahead.
Lucky for you, Carol.
So
the
maybe
company
that's why
is doing
3M
well
is doing
today.
well, yeah. Because Carol bought all the Post-its.
Yeah, that
It's
and
really
also
soaring. I'm amazed. Wow.
for sure up about 9% right now, and this is, of course, after they kept their full year guidance at a time when a lot of companies are flying blind with the tariff announcements, scrapping their guidance, withdrawing their outlooks. They estimated that tariffs will have a negative impact on their earnings. They see an impact of as much as 40 cents a share, but still keeping that guidance for 2025, which investors are seeing as a big positive right
How
now.
do you
and a lot
do
of companies
that?
aren't.
That's pretty impressive.
Yeah, I guess they're trying to wait it out, see, know, whether we'll get any reprieve from the Trump administration. Some companies are rushing to actually adjust for, what the toll of
Or
these
if you're
tariffs might
United
be.
Airlines, you give
Exactly. You give two scenarios. Can't
option
go
A
wrong.
and option B.
All right.
Exactly.
Well, speaking of tariffs that are moving a company's stock, Kimberly-Clark,
Yeah.
not in the direction if you're long the stock.
Yeah, very much on the flip side of this. This is a company that actually lowered its profit expectations. So we're seeing the stock down about 2% right now at a time when everything else is climbing. This is the manufacturer of diapers, paper towels, also very important kind of consumer staple products. Now it sees a flat to positive 2025 adjusted profit. That's compared to high single-digit profit that it forecast in January. So one interesting theme this earnings season is obviously outlooks are always important, but guidance has been particularly important at a time when, again, there are so few answers from companies on how tariffs will materialize. In fact, there was actually data from Citigroup that kind of supports the moves that we're seeing in 3M and Kimberly-Clark. They basically found that companies that kept or raised their guidance, they saw their stock move up an average of 1% the next day, but the companies that cut their forecasts, they actually saw a decline of about 4.8%.
Okay. A little sarcasm. Shocking.
Exactly. No surprise. But I guess investors punishing companies that are lowering their guidance more than usual here.
That's a good point. I'm surprised because I feel like these are consumer staples. Like you're going to buy them, even you might cut back on something else. So I'm a little surprised.
It's pretty mind-boggling. The numbers here, the company estimates that tariffs will add approximately $300 million.
Yeah. So, well, we're starting to get some, scope, right, and context around all of these tariff headlines that go back and forth. Verizon.
Another company which now is kind of flat. It was lower before. They reported a larger than expected decline in mobile phone subscribers for really interesting reason. First, they cited competition, but then they also cited that the impact of DOGE was taking its toll on the company, basically because fewer government officials were using cell phones. That's what their CEO said during their earnings call. He said, we saw some impact of the new government and their efficiency work. I don't know if he's just casting blame for perhaps high competition.
Well, maybe if they're a large government contractor in the sense of government employees using their phones, they provide phones, they provide service. If there are fewer employees, then people are going to be not going to be using those government phones.
Right.
It could be that. It's also worth noting, though, that a lot of their competitors like AT&T kept some of their holiday promotions, and they actually didn't. So that could be a reason. A lot of people also keeping their phones. I'm still on my dad's plan.
Well, okay. No.
I'm never getting off of it.
No, let me just say, no shame in that. No shame in that. Thank you for your honesty.
Hey, Tim, where did you get off the family?
Hey, this is,
I'm only
there
kidding.
are certain things that are not to be discussed.
I didn't say that you were on it. I'm just kidding. You can ask me the same thing.
I will say, Hans Vestberg, the CEO of Verizon, made an interesting point today. He said to analysts on the call, if we see increases on tariffs on handsets, which right now are exempt because of this pause, it's ultimately going to be passed on to the consumers. So consumers could end up paying quite a bit more. They pay over a long period of time, though.
I know. So does it, I don't know. Yeah. But still, right, we have so much pocket pocket money to spend out there. Thank you. We really
Thank you,
appreciate it.
guys.
Alexandra Semenova, Bloomberg News equities reporter. For more conversations, do check out our Stock Movers podcast. They're 5-minute episodes, roughly. Biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcast.
Elizabeth Sedrin is on her parents' plan too. Just throwing it out there.
You know, before I get in trouble, Tim is not on his parents' plan. Are you okay now?
I'm okay.
All right, for those who are
I
watching
might
on
be,
TV.
though. I might be.
The close is coming your way. We continue on Business Week Daily.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. Treasury Secretary Scott Bessent said today that the ongoing tariff showdown with China is unsustainable, and he expects a de-escalation in the trade war. Linda Kenyon is at the White House.
White House Press Secretary Caroline Leavitt says the president is optimistic about a deal.
We feel everyone involved wants to see a trade deal happen, and the ball is moving in the right direction.
Secretary Leavitt told reporters the president and the administration are setting the stage for a deal with China. In the meantime, while many of Trump's tariffs are paused for 90 days, Leavitt says the White House has received 18 proposals from more than 100 countries that say they want to make a deal. Linda Kenyon, CBS News, the White House.
Starting next month, the Education Department says student loans that are in default will be referred for collections. Press Secretary Caroline Leavitt.
Debt cannot be wiped away. It just ends up getting transferred to others. So why should Americans who didn't go to college or went to college and responsibly paid back their loans pay for the student loans of other Americans?
More than 5 million borrowers are in default. Some of the nation's top academic leaders are joining forces to battle the Trump administration. More from Michael Wallace.
In a joint statement, more than 100 college and university leaders criticize what they call the unprecedented government overreach and political interference now endangering American higher education. Yesterday, Harvard sued the Trump administration, accusing it of illegally freezing $2.3 billion of its federal funding. Northwestern University professor Elizabeth Shockman-Hurd is optimistic.
We've seen Harvard fighting back, MIT, Stanford is stepping up. I think the tide is starting to turn.
Michael Wallace, CBS News.
The State Department's about to undergo a massive overhaul, shuttering bureaus and laying off workers. Spokeswoman Tammy Bruce said the department is bloated and bureaucratic.
The sprawling bureaucracy created a system more beholden to radical political ideology than advancing America's core national interests.
The World Health Organization chief acknowledged today that U.S. funding cuts have left the UN agency with a huge budget gap. It's being forced to slash operations and lay off staff. In Rome, the Vatican has announced the funeral for Pope Francis will take place on Saturday. CBS's Seth Doan.
On Friday evening, they'll put a veil over his face. They'll close the coffin. Inside the coffin go some coins dated from when he was Pope, from during his papacy, and also some of the documents, a little story of his papacy. That's part of this great tradition that we're seeing unfold.
On Wall Street at this hour, the Dow Jones Industrials are up 993 points. This is CBS News. On this Earth Day, correspondent Matt Piper speaks with the owner of a New York company that's already dealing with what's known as a green premium.
David Bronke co-owns the Siblings sustainable candle brand and says he's already hit with higher costs to use eco-friendly materials. But with the incoming tariffs, the price he pays for things like packaging and a premium wax will get even higher.
It's anywhere from 10% to, in the case of China and Vietnam, more than 100%. In Vietnam, it's almost 50%.
Bronke says he wants to stay eco-friendly, so the costs may rise for the consumer.
Earth Day is a huge thing for us. We look at it as it's all year round. We're not just trying to do it just one day in April. For us, it's about how do we source the best possible products.
Matt Piper, CBS News.
We're expecting to hear soon from Health Secretary Robert F. Kennedy Jr. on plans to phase out 8 commonly used food dyes. They're petroleum-based. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody. Yes, indeed. This is Bloomberg Business Week Daily. Carol Massar, Tim Stenivek, live here in our Bloomberg Interactive Brokers studio. We are under 55 minutes away from the closing bell on Wall Street, bouncing around off our highs and lows. We've been in the green, though, really throughout the session. We are still up about 2.5% on the S&P 500 and 2.6% on the NASDAQ 100. So we continue to hold on to gains today. Some of the news out of Washington giving a bit of a lift to U.S. stock trading a little bit earlier in the session when Secretary of the Treasury, Scott Bessent, making some comments maybe about U.S. and China moving forward. Although
we don't have specifics.
Nothing concrete.
The devil is in the details, and we don't have the details.
Nothing concrete. It's not like they've met and talked.
But it shows how eager investors and traders are for some good news. I mean, as soon as the headline crossed, we saw a lot of buying. Tesla shares are up 4.3%. We're going to hear from the company after the bell. Today, maybe higher, down 40% so far this year, 50% from all-time highs at the end of last year. We got a great group joining us. In just a few minutes, we're going to talk to Ed Ludlow. And then after we hear from the company, Craig Trudell is going to be joining us from London. We got Ross Gerber of Gerber Kawasaki, who's had some choice criticism for Elon Musk over the last few months, so we look forward to that.
Has owned the cars, owns the cars, has owned the stock, buys them, buys the stock, sells it sometimes, so we'll see where he is. And did you mention rare earths?
Not yet, but we're going all in on them.
We're going to talk about the CEO of USA Rare Earths, what's actually going on here in the United States and maybe what's to come. So a lot to get through. Right now, though, let's get to the trading session and check in once again with Charlie Pell.
Hi, thank you very much indeed. We got 53 minutes now to go ahead of the closing bell. The Dow, the S&P, NASDAQ, very much in the green, but we are off session highs. The best level of the day, we had the S&P up roughly 3%. Right now, looking at a gain of 2.4% on the S&P, up 121 at 52.80 right now on the S&P. Stocks higher on tariff optimism today. The Dow up 962, up 2.5%. The NASDAQ Composite Index up 410, up by 2.6%. Broad-based rally with the Russell 2000 Index of small cap shares gaining 2.7%. The 10-year 4.38%. The 2-year 3.80%. Gold down $40 the ounce, 33.83, a drop there of 1.2%. And West Texas Intermediate crude up 2%, 64.31 a barrel. Bitcoin surging by almost 5%, retaking the $91,000 level, $91,625 right now on Bitcoin. Bottom line here, stocks have paired their gains, but still an up day. As for sentiment and the market backdrop, Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
We're sort of in this growth scare phase, which is similar to the 2010, 2011, 2015, 16, and 2018 drawdowns, where there was real fear of a recession or a big systemic crisis, but it did end up happening, right? It was a near miss. That's what we're pricing in right now. So the market is clinging to some hope that we can avoid a big crisis and that we can avoid a recession.
Lori Calvasina of RBC Capital Markets. Amazon's web services business is pausing some data center leases, that according to Wells Fargo Securities. Amazon, part of a broader tech rally today, up now by 3.3%. The big story coming up after the close of trading. Yes, we're going to be all over it. Tesla earnings. Tesla shares right now ahead of that report up by 4.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. As I mentioned, Tesla
Ready to talk
is...
Tesla?
Oh, I'm so ready.
Okay.
Set to release first quarter results after the bell today. A lot of questions, though, about whether it will be able to meet its goal of expanding annual sales, among many other questions. Ed Ludlow is the co-host of Bloomberg Technology on Bloomberg TV. He joins us from our San Francisco bureau. Ed, it has been a rough start to the year. I mean, we can just tick off a few things, right? Weaker than expected first quarter sales. We learned about that earlier this month. Backlash to Musk here in the U.S. and outside of the U.S. for lots of different reasons. And then the cars. They're getting a little long in the tooth, especially when you compare them to what's coming from China. What do we have to hear from Elon Musk today to ensure that investors are kind of satisfied with the direction things are going?
Yeah, I think buy-in from him that he's sort of interested and enthused and focused on Tesla. You know, it's like a beautiful time of year. I'm going to give you guys a little inside scoop on what I'm going to say in the top live blog in just an hour's time. But I'm basically going to say, go back to the 10K that they publish every year. In fact, if you have time on your hands, go to the most recent one, which came out in January, and then go to last year's and the year before that. And Tesla's always had this boilerplate about how much they rely on Elon Musk. But each year, the paragraph gets a little bit longer because the boilerplate also says, while Elon Musk is an active member of Tesla's management, he has other responsibilities elsewhere. And if you think about it, starting in the new year, Doge takes up quite a lot of his time. What I hear from investors a lot recently is that they feel he's more interested in XAI. So when he is done with Doge, that might be an area of focus going forward. And I've been running some checks on that. So that's the threshold here. When we have this earnings call, because we know the numbers won't be strong in the written statement, is he showing that he's really all in on Tesla? And I think that's what most on the buy side and the sell side want to see.
I know, but I do wonder, is he considered like a master in terms of finding really good people who maybe you don't always know their names and they're not in the headlines and they're not the ones making news, but
like a Gwen Shotwell of SpaceX, for example,
that are running his different units and divisions when he's maybe moving on to something else. And so what's happening at Tesla maybe is more just about backlash and political, or rather than maybe something wrong with the company.
On the one hand, there are very capable people at Tesla, right? And we always talk about it in the context of like Elon Musk announced this or Elon Musk said this. Well, there's 100,000 other people that work at that company that might think, well, I contributed something towards this initiative. And, I know, for example, that a lot of the staff in-house in Austin were trying out the new robotaxi app and putting it through its paces over in Austin, while Elon has been traveling and doing different things. On the other hand, if I may, I'll go back to the 10K, to the next paragraph, which says, Elon has extraordinary abilities and there are other employees with extraordinary abilities. And if we were to lose those people, including Elon, then operationally the company would suffer. Because you can't have it both ways, right? Many people do credit Elon Musk being directly in a granular way involved in the engineering and product decisions. That's how he does things. Get in a room, convince me that I'm right or wrong, then a decision is made. And he's just not been in that room, so to speak, in recent months.
Ed, the question I have is about the autos and the actual cars. Because if you look at the lineup, as I mentioned, I think there are critics out there would say, and we've spoken to some of them, that it is getting a little long in the tooth, especially with what you compare it to against what China is doing. Now, here in the U.S., that doesn't matter because you can't get BYD, Xiaomi, and Huawei vehicles here, among many others.
Correct, yeah.
But in other parts of the world, like Mexico, you can do that. In certain parts of Europe, we're starting to see them. Australia as well. That's an issue for the company, no?
Tesla has a product pipeline, right? And I think, there's been recent media reports that, in part because of what's happening with tariffs and trade war, the launch of a so-called cheaper, affordable model has been delayed. But, Diana Hall and I have also done the reporting. I think we've discussed it on this program, that we don't think that it was ever as simple as saying they planned in the future to launch a single cheaper variant. We think it might have just been a re-engineered version of a car that already exists. Traditionally, US automakers or European or Chinese come out with new refresh models at a much higher cadence than Tesla does. We know very simple things. Sales data in the first 3 months of the year was bad, the sort of lowest level of sales for Tesla in about 3 years. There's evidence that part of that was because of Elon Musk's relationship or affiliation with the US administration, right? And so it's almost like a protest, non-purchase of the thing. But there's other big economic and trade considerations that are still in play. And you just have to go line by line through the earnings statement like you would any other company.
So I'm looking at the EE page on the Bloomberg, right? Looking at the earnings overview. The numbers have been coming down, we know, in terms of the estimates, right? For Tesla.
Big reset.
It's exactly. So what is it that they could say that would really be truly positive? And maybe it's not such a negative outlook. What would say, oh, wait a minute, it's much worse than even what analysts were expecting, besides just a miss?
Some sort of growth projection for the year that indicates, 2 million vehicles rather than 1.5 million or something like that. Tesla is insulated, right? It has more components that are made in America and it is fully assembled in America, but it is not 100% immune to what's happening in trade right now. Just like every other OEM, they rely on a supply chain through Mexico for like simple things like glass on the windshield. That's normal stuff. And so margins are an area to focus. They've been brilliant at protecting margins, but there is going to be some exposure on the raw materials side, on the volatility of markets for their components and their raw materials that are live, right? They move in real time, no matter how far in advance Tesla tries to commit to contracts. All this is up for grabs this evening, but I think what many accept is that it's just a moment in time. What we're most interested in is a much bigger picture conversation, like is Elon Musk invested in this company or not, and how far away are these big exciting things like the Optimus robot and the robo-taxi from being real, tangible revenue drivers?
Yeah, June is when the company's supposed to launch that test of its robo-taxi service. That's supposed to be in Austin, so all eyes on that. Ed, Elon's typically on the calls, Ed? Do you expect him to be on today's call?
Yes.
Bad sign if he's not?
Yeah, but also you learn a valuable lesson in everything that's happened in the last 4 years or even beyond that. Expect the unexpected. It wasn't that long ago that Elon Musk was on X, then Twitter, saying, well, I'm not going to be on every single earnings call. He ended up being on every single earnings call, but he told us that he wouldn't necessarily. Yeah. So just be braced for anything. But it's a very interesting time, right? That the association with the Trump administration, the Trump bump that you saw in November immediately following the election, it's kind of faded. And maybe he wants to speak to that.
Is the Tesla brand faded too? Our Joel Levington, who covers credit, director of credit research for our Bloomberg Intelligence team, had some research out, I think about a day ago, and he said a 2025 Tesla Model Y can be leased for as little as $199 per month, similar to a Dodge Hornet. Further signs demand for Teslas is waning and undermining its luxury brand status. 30 seconds. I mean,
so let's go to the economic, in a recessionary environment where consumers are facing price pressures. That sounds like a great deal. For transparency with your audience, I lease a Tesla Model Y and I pay $300 a month, and it's the cheapest vehicle I've ever leased. And I would say, from a technology perspective, the best. But all of that again is still up for debate, the economic. And sometimes Elon Musk will go there. He'll say, this is what we see in the consumer. This is what we see with competition with ICE or hybrid vehicles, for example.
Yeah. All right, good stuff. Good preview, setting us up for Tesla earnings after the close. Ed Ludlow, thank you as well so much. Co-host of Bloomberg Technology. Catch him and Caroline Hyde at 11 a.m. Wall Street time, Monday through Friday. Shares of Tesla up about 3.9%. Coming up, we're talking rare earths. Looking forward to this one in the U.S.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ solidly in the green. We are off session highs, but still looking at a 2% gain on the S&P 500 index at the best level. The S&P had been up as much as 3%. Dow Industrials up 874 now, a gain of 2.3%. S&P up 105 at 5263. NASDAQ Composite Index up 337, up by 2.1%. The 10-year 4.39%, with the 2-year 3.81%. Spot gold down $43 the ounce, now down 1.3%. 33.80 on the precious metal. West Texas Intermediate crude up 2%, 64.31 a barrel, and Bitcoin up 4.8%, 91,573 right now on Bitcoin. Bottom line here, stocks have paired gains as traders assess the latest news reports on the White House's progress in fleshing out trade deals with top economic partners. Coming up after the close of trading, we will be hearing from Tesla. Tom Narayan is an analyst with RBC Europe.
Is always the case with Tesla. Folks will look initially at the quarterly numbers and then wait for the earnings call and to see what the CEO actually has to say. I think it's going to be no difference today.
And, of course, what's next for Elon Musk's career path? The treasurers of 8 U.S. states have written an open letter to Tesla's board of directors questioning the direction of the company and the level of attention that Elon Musk is paying to its mounting challenges. Ahead of earnings, Tesla up by 3.5%. Recapping, stocks higher, S&P right now up by 2% for on-demand news 24 hours a day. Subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, Charlie, thanks for that update. Do appreciate it. Well, it is time for another edition of Bloomberg Plugged In. It's your weekly look at EVs. And today we're focusing on so-called rare earths. These are crucial raw materials used in the likes of MRI machines, missiles, and yes, EVs. Just last week, we learned that MP Materials, it's a U.S. producer of rare earths, stopped shipments to China after Beijing placed export controls on similar materials crucial for defense and tech manufacturing. This move follows Chinese restrictions announced earlier this month that are expected to have broad impacts on companies making optical lasers, radar devices, and high-powered magnets used in wind turbines, jet engine coatings, and other advanced tech. China is the world's dominant supplier of rare earths, while the U.S. produces and refines very little of its own. We've got Joshua Ballard, CEO of USA Rare Earth. It's a roughly $840 million market cap magnet manufacturing company. Joshua joins us from Oklahoma. Joshua, good to have you with us. Kind of a long introduction because we're at an interesting place right now where I think a lot of people are really hearing about rare earths for perhaps the first time in their lives and really paying attention to this. I wonder how everything that we're hearing from the U.S. government and from China is affecting your business.
Well, it's affecting us in an interesting way. I mean, we're just getting started, right? We're building a large magnet facility out here in Oklahoma, where I am today. And for us, what it means is a lot of customers are calling, honestly, because there are few to none of these type of magnet facilities in the U.S. We're going to be the first and one of the largest domestic magnet facilities here. So we're getting a lot of phone calls, honestly.
So give us an idea of the time frame. Like, when is it up and running? What will you be
do you have anything to
selling?
sell them right now?
Yeah, no, today what we've done is we've commissioned a lab, so we're prototyping for customers. There's always a qualification process, even in, at times like these. We're commissioning the plant. We're targeting the first quarter of next year. So we're a few months away, but we can at least start working with the customers, making the grade of magnets that they need, get them comfortable that we're capable, so we can hit production hard as soon as we commission.
What's going to be the output? Like, how much? I mean, we talk about this rare earths and magnets and what they go into and so on and so forth. So give us an idea of what's needed in the U.S. market and what you guys can ultimately supply.
So what's needed in the U.S. market, if you think about the global size of the magnet market today, it's probably around 250,000 or maybe up to 300,000 tons of magnets per year. In the U.S., outside of China, probably 2/3 of that is being used. And if you take the U.S. at 25-30%, we're maybe around 50,000 tons per magnets, 30 to 50,000 tons. Our facility itself, at our peak, will be building up to 5,000 tons. And to put that in perspective, 5,000 tons is hundreds of millions of magnets. I mean, it's a lot of magnets going out the door for everything from auto supply to EV manufacturing to drones and defense, everything across the board.
What will be the price of those magnets in comparison to what folks have been getting out of China?
Probably roughly double. So these tariffs are probably getting things into the realm of what we can manufacture here in the U.S. You have to realize, especially
No, but
as
I'm saying,
all
but
of the
pre-tariff, you're saying that pre-tariff it would be double. About double of what it was. No, I understand tariffs change the equation, but you're saying it'll be double the cost. Why is it more expensive here?
It's more expensive for a couple of reasons. One, it's just we have none of the supply chain here, so everything has to come from overseas. So you have a lot of extra logistical costs and profit being built into the supply chain as it gets here. And also, generally, our overheads and labor regulations and taxes are much higher here than they are in China, for example, just like it is with everything else. And all of that drives up costs. And we're just not as efficient. I mean, we have a lot to learn. We got to build these factories and really make them efficient here in the coming years so that we can start to really compete in the future.
Where are you sourcing the rare earths right now?
Right now, we're sourcing with our partners and good friends, Australia Strategic Minerals. They're working on a deposit in Australia, and they're sourcing out of Vietnam, Southeast Asia, and we make the metals in South Korea in order to bring them here to the U.S. We have no rare earth metal making here in the U.S. either, so we have to do it all overseas until we build up here.
Were you sourcing from China before the tensions earlier this year?
No, we were not.
So
we did this offtake agreement with them a couple of years ago, and they've been our partner since.
And what about when it comes to processing?
So when we think about our deposit, we're looking to build the first fully domestic rare earth supply chain here in the U.S. Processing in the U.S. is mostly sent over to China in order to process the minerals that we're getting out of the rock. We've been working on our own processing for our deposit over the last few years. So our plan is to process here in the U.S. and Texas on site at our deposit at Round Top Mountain, which is near El Paso in West Texas.
Josh, forgive me if I sound, we're all learning about rare earths, who, as we joke, not so rare, but, you find them in small quantities, so it takes a while to get them out and so on and so forth. But when you say processing, is that the same as mining of what you're going to be doing, or the processing that is currently in China that actually makes it all usable?
Yeah. The processing is the science to get the minerals out of the rock. So rare earths are not like coal, where you go in, you have a big vein of coal, and you can just dig it out and use it. Rare earths are actually they're in the rock, and they're in maybe 50 parts per million, or 100 parts per million, or 500 parts per million. You have to actually use science engineering to pull and leach out those minerals from the rock itself in order to process it to create the ore oxides that you use to make metals. So there's an entire science and engineering outside of the mine itself, which is basically digging, breaking up rock, crushing it, and leaching it in order to get the minerals. So there's a whole science to it, which right now China has control.
You mentioned Round Top outside of El Paso. What is the goal for getting this online? Because my understanding is in order to process here in the U.S., we're still years away from seeing that.
Yeah, and we're a few years away too. I mean, our goal here at USA Rare Earth is to build our initial pilot plant over the next couple of years. We're getting through the science of it. We're pretty comfortable on where we're headed. Like many of us, we had dark corners, running into walls a few years ago, as you try to figure out the science around this processing. We made a lot of great progress, so we're starting to push forward towards a pilot plant here over the next couple of years. And from there, we would build the full mine and processing facilities in Texas. So we're a few years away, but not as far as if you look at Greenland or Ukraine that we've been talking about a lot in the news in the past months. They're decades away. We're talking about a few years.
So let me clarify. So the magnet facility that you talk about in the first quarter of next year, that's going to actually be providing product or not yet?
It will absolutely. Yeah, the magnet facility will go online.
Okay.
Ultimately, we want our feedstock to come from that deposit in West Texas. But as we start, we're going to have to get feedstock from overseas, which for us is going to be South Korea, specifically working with KSM and other partners.
So the feedstock is what you're saying is going to take a couple of years to get to?
Yeah, through our deposit, yeah. To have that fully integrated supply chain.
Why haven't we done this in the U.S.? If this was so important, why hasn't this happened sooner rather than later?
Yeah, it's a great question. And the reason why it hasn't, if you go back 30, 40 years, early 90s, there was a vice premier in China who said, the Middle East has oil, China has rare earths, right? They had a strategy around this for years, and they've been very successful at it, at building a very strong supply chain in China, which we gave up on. They did it more effectively, they did it cheaper. We've known this for years. None of what's happening today is a surprise to any of us in the industry. This was bound to happen. We had one choke point in China that can, and these heavy rare earths that they focused on, this export control, they control over 98% of it. I mean, they chose these minerals for a specific reason, to say nothing for the fact that they're used in industries such as defense, where we really need them. And so we walked away from it. We were addicted to low cost. We heard from customers prior to all this as well that, well, you can't do it as cheap as China. Maybe we won't do it. Now suddenly we're getting phone calls again as people realize the value of the risk in having a supply chain completely contingent on one choke point.
Yeah, it's interesting that the U.S. is just realizing this, given that this kind of happened to Japan, 15 years ago or so, with that territorial dispute with, I think, fishing. So now Japan keeps like this 1 year supply of some of these rare earths because they didn't want to be at the whim of another country. What do investors need to understand about your company? Because correct me if I'm wrong, but my understanding is you were originally focused on rare earths in particular, but then you've pivoted to becoming a magnet manufacturer. What's the distinction there?
The distinction is magnet manufacturing, first of all, is an execution story. So we're building a plant. We know how to build the plant. We know how to build magnets. We just need to produce good quality product for our customers. So that's all about execution. It's a near-term event that'll occur early next year, and then we're going to scale up as quickly as we can after that, up to our 5,000 tons per year. So it's a near-term story. The deposit, and I should say too, on the magnet facility is we're going to be the first really and largest diversified facility to focus on the broader market. So there are other magnet facilities in the U.S. today and our peers, but they've been bought by auto manufacturers and are really bespoke for an auto manufacturer. We're really looking to focus on the broader market, which is unique today in the market. We'll be one of the only ones, one of the first.
Josh, if tensions ease between the United States and China and tariffs are not as onerous as we are seeing today, what does that do to your mission? Does it back off, especially if all of a sudden imports from China in rare earths and magnets are less expensive?
I don't think it backs off. I think the world has certainly woken up to the risk inherent in the supply chain. We were already getting interest before this. I think it's heightened now, obviously, with tariffs and everything else. So maybe the full supply chain wouldn't move over right away. We don't need the full supply chain. I'd be happy with 10% or so. But there's still, that risk has been heightened. People understand it. There's a cost to that risk. They have to diversify. They need to do it domestically. And the patriotic play is important today. And I think companies are going to want to talk about that. We had our first announcement today with a great smaller customer, great customer, who wants it for the patriotic play, right? They were talking to us well before these tariffs came into play.
All right, going to leave it there. Hey, listen, thank you so much. Really appreciate it. Joshua Ballard, he's CEO of U.S. Rare Earth. It's about an $840 million market cap company, magnet manufacturing company. We heard more of their mission. Stock down roughly 12% year to date. This is Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. We are also minutes away from the latest numbers out of Tesla. But right now, let's head over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are rallying in the wake of yesterday's sell-off, with the Dow currently up 870 points. S&P's rise by 103 points, and NASDAQ gains 2%. The U.S. 10-year yield is at 4.39. Gold is sinking. Oil is climbing. And Bitcoin, that's jumping by 5%. Among the main 11 S&P sectors, all were trading in the green, led by gains in financials and consumer discretionary. And leaders to the upside in the Dow, 3M and Travelers. Modest losses for UNH and Verizon. In deal news, Boeing to sell its flight navigation unit for $10.6 billion in cash. And after earnings, GE rose 5%, while Northrop Grumman fell as much as 15%. And that's the biggest drop since 2008. Wrapping things up, like you said, Tesla reports after the bell. Live from the first breaking news desk on Bill Maloney. Charlie?
All right, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a twin.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. We've got just about 18 minutes to go until we wrap up the trade on this Tuesday, April 22nd. Of course, we've got some big earnings. Charlie mentioning it. Tesla, certainly the big one, but Capital One Financial, Intuitive Surgical, Enphase, Steel Dynamics also reporting after the close, but we're going to be focusing big time on Tesla. We are definitely off our worst levels of the session, off our highs. But as we heard from Charlie and Bill, up about 2.1% on the S&P 500, NASDAQ 100, Tim, a gain of about 2% as we speak.
It's almost like people are forgetting that we have company after company telling us they're concerned about tariffs and
it's interesting,
the outlook. Yeah, I want to see what Tony Roth has to say about it. He's Chief Investment Officer of Wilmington Trust. Tony joins us this afternoon from Radnor, Pennsylvania. Tony, a recession, yes or no, in the cards for this year?
Well, tell me what is going to happen with tariff policy, and I'll tell you whether we're going to have a recession. Right now, our forecast is 60% that we'll have a recession, and that's essentially probability weighting the fact that we may be getting to a point, we think we are getting to a point where we're past the point of no return with respect to pulling back on the tariffs. And
what does that mean?
I heard,
what does that mean? What does that mean?
Well, it means that even if they were to de-escalate now, there's been enough damage to supply chains, specifically with respect to China, and to the soft data, the consumer and the business confidence, that there's going to be a significant slowing in economic activity because of the tariffs and the uncertainty that have been released by the administration in their very poorly orchestrated efforts to achieve a very righteous goal, unfortunately. And consequently, we'd have a recession. I don't know that we're there yet, but we're pretty close.
Well, when is the point of no return?
Well, I would say certainly by Memorial Day, if there isn't a significant de-escalation. And I think the important way to, understand the environment is there's China and there's everybody else. And for right now, for everybody else, there's a 10% tariff in place. We can continue to trade with those countries. But with China, it's an effective embargo. And there are many respects in which that embargo will be existential for thousands, if not tens of thousands, of small businesses in America, and that will impact supply chains, will create even deeper levels of degradation in consumer confidence. And so, what the administration has done here is really reckless, I would have to say, the way that they've gone about this. If you care about the economy, if you don't care about the economy and you're just looking for some other goal, that's some type of long-term, national securities, other sets of values other than economic ones, then this could be the right thing to do.
Well, to be fair, I think President Trump has thought about tariffs for a long time, right? And many would argue that his reasoning, just to look at the other side, is that this is a way of getting investment in the United States, bring back some jobs, bring back a certain part of the economy, be it the manufacturing, that has really gone to the wayside over, 50, 60, 70, 80 years. Having said that, we are a service-led economy, and many would also say that that is the kind of economy you want to have. It's kind of, whether it's financial services and so on and so forth, maybe a more sophisticated economic economy. But I don't know. Do you think that ultimately this experiment potentially that the president is doing, that it could bring back a lot of investment to the United States and jobs and actually work?
No, I don't. Not the way he's going about it. In fact, I think that he's causing the exact opposite outcome as it relates to investment, as we're seeing a unpredictably weaker dollar in terms of how weak it may get. We're seeing deep concern around the foundational bedrock of our system being the U.S. Treasury security as a store of value. And so we're seeing a repulsive effect from a capital and investment formation standpoint. As it relates to manufacturing, the type of manufacturing that we want back in this country, which is high value semiconductors, pharmaceuticals, those are the kinds of things that can't come back in the time frame that the president is going to be in office. And they can start to come back over that period of time, but they can't actually really come back in that time. And so in order to create an environment where those types of flows will occur, he needs to create an incentive system where it's in the interest of companies to do that. Mm-hmm. And right now he's not doing that. He's trying to achieve he's a very cause and effect oriented guy, and he's trying to be the biggest cause and bully an effect that he wants to see. But companies won't abide by that because there's no underlying incentive for them to keep that manufacturing in place or even create it. In his 3.5 years left of his administration, he's got to create a structure, and I'm not sure that that's a nuance that he grasps.
So what's an investor to do right now?
Well, I think that we're at what I would call this, and this was a term I heard by a guest on the TV channel, Bloomberg TV this morning. I don't remember who it was. This is the Wile E. Coyote moment, where the embargo on China is going to be so damaging to the economy that you see Besant today coming out and saying, well, this mutual embargo, it can't last in the very near term. You're going to see the de-escalation. Now, I have no idea what that means. But as I've described, we're at this moment now where if we don't have a very, very significant de-escalation with China within the next 30 days or so, but certainly by Memorial Day, we will be irrevocably into a recession. And then the question will be, how deep will the recession be? And so as an investor, I think that you have to stay tight to your long-term goals. And you have to essentially be ready if we get a pop in markets to de-risk if you don't believe that it's true, or you have to be ready to re-risk if we go down into the mid 4,000s, I think, where there's probably better opportunity. But right now we're sort of in this no man's land between this range of, call it 4,500 to 5,500, where we expect markets to sort of bump around now in a very volatile fashion until we get to a much more certain and less damaging position from a tariff standpoint. And by the way, they've grossly miscalculated, in our estimation, the leverage that they have with respect to China on multiple levels. China largely imports from us commodities they can get from anywhere in the world. Yeah. And we import from them very critical supply chain components that range from rare earth minerals to 90% of the plastic trays that our poultry sits on or our meat sits on. All comes from China.
No, you're right. The longer this goes on, I think COVID started to open up that window. We realized how much our supply chain came out of China, but rare earths were something Tim and I were just talking about on our broadcast. Hey, Tony, thank you so much. Tony Roth, Chief Investment Officer of Wilmington Trust, joining us from Radnor, Pennsylvania. Memorial Day, he says.
All right, clock is ticking.
That could be the point where there's kind of no going back in the impact on the economy, at least according to him. All right, this is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, folks, just under 7 minutes to go until we wrap up the trade on this Tuesday, and then we're going to get into some earnings. An earnings drop, the big one, obviously, Tesla. That should come out just a few minutes after the closing bell. Capital One Financial also coming your way, but we'll be breaking them down and certainly digging deeper into what we get. In the meantime, we've got stocks off their best levels of the session, as you just heard from our team, but still up more than 2% on each of the major equity averages. What?
I'm just seeing a lot of...
Where you want to go?
Well, I kind of want to go to this media story, Carol, because...
60 Minutes?
Yeah, because you...
Are
if there's one thing I
obsessed.
know about Carol Massar, it's that on Monday morning, she'll come into the office and she'll say, I was watching 60 Minutes last night. Did you see...
There's a really cool story on the butterflies, by the way. If you haven't seen it, you should really check it out.
Anderson, right?
And then,
Right?
yeah, exactly.
Yeah.
And you feeling good about stuff? What about bird flu?
Oh, was that a good one too?
That's a bummer.
Well, the reason we're talking about this is
But
because...
I highly recommend you check out that piece. Pieces. There was one more. I can't remember what the other one was.
Well, it was 2 days ago at this point.
Yeah. Anyway, yes, I do watch. I'm a little obsessed.
It's one of the most read stories on the Bloomberg terminal. It's about Bill Owens stepping down as executive producer of 60 Minutes on CBS, citing a lack of independence as the news program's network copes with a lawsuit and ongoing criticism from President Trump. This is a big deal.
Yeah, 37-year-old CBS News veteran, there for a long time. 37-year-old, 37-year CBS News veteran. He's been there for almost 40 years.
Okay.
He's not 37. He may think like a 37-year-old, but who knows? But he's been there for 40 years. So a long, long time. Lots of news cycles, lots of stories, lots of coverage. He put out a memo to staff that it had become clear he, quote, would not be allowed to run the show as I have always run it, his words, to make independent decisions based on what was right for 60 Minutes, right for the audience, end quote. He's going to stay for a few more weeks.
Yeah, he'll stay for a few weeks. This is according to a separate memo from Wendy McMahon, who runs CBS's news division and its stations. The New York Times reported earlier on Owens' departure. Trump is suing CBS over an October 60 Minutes episode featuring Vice President Kamala Harris. Trump said the editing of the interview amounted to election interference by presenting her in a more positive light. He's seeking $20 billion in damages.
That's billion.
Yeah, 20 billion.
With a B. Yeah, in an April 14th social media post, the president continued to complain about the program's coverage of his administration and urged the FCC chairman, Brendan Carr, to impose fines and consider revoking the company's broadcast licenses. The suit has posed some complications for a planned merger between CBS parent Paramount Global and Skydance Media, which still needs approval from the FCC. And we'll see what happens. We know that there have been other networks caught in the crosshairs of the administration over either some coverage or things said, and there have been some settlements. So, yeah.
Hey, before we go, we got about a minute left, and we're still seeing some buying into the
Can
close.
I say something, though?
Please.
Free speech certainly really important to America, obviously, right?
Okay.
Right?
Yeah.
So core.
It's in the Constitution.
Right, exactly. But I think, and people at the same time would say fair coverage, right? And news programs, it's so important. So I think, the world has to be careful as we go forward between what is accurate but maybe uncomfortable versus things that are not accurate. And those distinctions need to be made. I'm just saying.
We'll see how it plays out in court.
Totally.
Yeah.
But this is kind of, one of those things that we're living with. Where you want to go?
I want to just...
I'm hopping off my soapbox.
That's okay. Stay up there as long as you want. Just another headline. This one's from Jackie Davalos. The Department of Government Efficiency is slashing about $135 million in funding for research grants from the National Science Foundation. This is a key federal agency that supports AI development, according to people familiar with the matter in an internal document viewed by Bloomberg. The cut impacts dozens of active grants, including several programs focused on combating misinformation and deepfakes, according to the document.
So this kind of goes back to what we were, the importance of making sure that the information, there's so much information out there, and being just so careful of understanding what's real, what's not, what's accurate, what's not, what's truths, what's not. Hey, welcome to 2025, everybody.
It's only April.
It's only April. It's only Tuesday, Lemon. Hey, do not go anywhere. Tesla earnings coming your way. The close, too. We're heading over to our TV colleagues. The closing bell starts right now.
Markets pricing the outbound move percent stock.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you through that closing bell, a global simulcast. It starts right now. Carol Masser and Tim Stenovic in the radio booth. Scarlet Fu on assignment today as we welcome our audiences across all of our Bloomberg platforms, radio, television, and of course our partnership with YouTube. A pretty decent rally, Carol Masser, 2.5% on the S&P 500. Well, is that going to be 2.5% tomorrow as well?
I don't know. Time will tell. Let's see if Tesla has anything to do with it. Maybe we could get some indications from Alex's shoes. Is there anything that we can get out of that?
Nothing.
They're
You can
groovy.
learn nothing. These look like they're from the 70s, so I don't know what that tells us about inflation.
Wait a minute. Wait a minute. I don't know. Yeah. Are they platforms?
Yes,
They
they're
are.
platform. They're like 5-inch platforms.
You know, like how skirts, like minis, maxis, like give
Yes.
indication for the economy?
Is this what we're talking about?
I don't know if
No.
deals are going to be that. But you know what's going to happen? We're
What?
going to get Tesla in 4 minutes.
All right. We'll get back to what we
But
need to do.
before that, I think we should talk about why stocks are rallying today. The crucial moment of the day was just around noon when our own Bloomberg News team reported Treasury Secretary Scott Bessent's comments from this closed-door program down in Washington. It just shows how eager people are to see progress on the trade deal or a trade deal. We don't have any details on it. We have no idea of a timeline here. We don't know anything about it, but investors are optimistic.
I mean, yes, but ... We also saw futures higher before any of that
Yes.
happened in the morning because we had that sell-off yesterday. So it's hard to take direction from the headlines. But to your point, when volume
Yeah.
is thin, you're going to have whippy moves.
And I would just point out, too, and we also had some decent earnings today that I think also maybe gave some folks a little bit of life, whether it was Pulte, whether it was GE, whether it was Synchrony, even Verizon and Danaher reporting some relatively decent earnings here. And 3M as well, one of your favorites,
Love
up
3M.
about 8% here on the day as we get the closing bells in New York and as we await those earnings out of Tesla. A Dow Jones Industrial Average higher by 1,000 points or 2.7%. The S&P higher by 130 points or 2.5%. The NASDAQ adding about 2.7% here on the day. And the Russell 2000, the small caps, up on the day, 2.71%.
Wow, nice big move up to the upside there. Let's take a look at the S&P 500. Guys, almost every name higher in today's session as we settle in. Right now I'm looking, Alex, at 494 names actually gaining in the S&P 500 today, 9 to the downside.
Pesto pie, guys. It's all green. Let's just leave it right there. Green across the screen. You've got consumer staples, industrials, healthcare, and real estate. Those are the underperformers, and they're still up anywhere between 1.5% to 2%, outperforming financials, discretionary, and communication services.
All right, guys, let's get to some of the individual gainers as we await a drop of earnings, including Tesla. And I'm going to start with Tesla, up as much as 6.7% ahead of earnings today, finishing with a 4.6% gain. It was a top gainer in the NASDAQ 100. Danaher actually putting out that the treasurers of 8 U.S. states have written an open letter to Tesla's board of directors expressing concern about the company's direction and Elon's level of attention to its challenges. So we'll see if we get maybe any kind of upbeat news that maybe puts some of them, their concerns at rest, but we'll see. For solar.
And I just want to add, too, we're actually going to talk to one of the signatories on that letter, the California State Controller, in the 4 p.m. hour right here on Bloomberg.
Pretty cool stuff, so that'll be interesting. In the meantime, First Solar, we did see solar stocks rise after the U.S. set new duties as high as over 3,500% on solar imports from 4 Southeast Asian countries. So the whole sector really popping in today's session. You have First Solar up about 10.5%. And Equifax, you mentioned earnings. Number one gainer in the S&P 500. The Consumer Credit Agency did report adjusted earnings per share for the first quarter that beat the average analyst estimate. They kept its 2025 guidance even with uncertainty in macro and markets outlook, and they boosted their quarterly dividend and announced a $3 billion buyback. So again, that stock, Equifax, up about 14% today.
Okay, you had the gainers, I have the decliners. I want to start with Northrop Grumman. It closed down 13%. This is its steepest one-day drop going back to 2008. The company reported a 47% decline in first quarter profit. It missed analyst expectations. It cut its earnings forecast for the year due to increased costs for its B-21 stealth bomber program, a $477 million addition to its pre-tax charge on that B-21 program, and slashed its outlook for operating income by up to $600 million for this year. Also, Kimberly-Clark getting hit with tariffs, as a result of tariffs, I should say, down 1.5%. The company lowered its profit expectations for the year due to uncertainty from the global trade war's impact on its costs. The company estimates tariffs are going to add about $300 million of incremental costs, which with plans to offset these costs over time by finding savings within the supply chain. And finally, Halliburton shares falling today by 5.6%. The company warned investors that tariffs will impact its business units. It expects a 2 to 3 cent per share impact on the second quarter. Shares fell as a result. 60% of the tariffs impact affecting its completions and production unit, which houses its fracking business. Alex.
All right, just real quick, want to hit on yields here. So you had the front end selling off a little bit, a little buying in the back end, but that buying in the back end was no match for that dramatic selling that we've seen in the last few weeks. We did a 2-year auction, so we get a 5 later on this week and a 7. The 2-year auction was fine. I mean, nothing right home about a little weak bid to cover ratio, but you got lower yield, so a little bit less incentive on that, guys.
Yeah, as we await the earnings out of Tesla and a few other names, I want to bring your attention to Oklo. This is the nuclear power company that helps to build nuclear fission reactors, down about 11% right now. We've now learned that Sam Altman, of course, this is the co-founder of OpenAI, he was the chairman of the board of that company. We're now learning that he has stepped down from that role. Not quite sure for the reasons, though. We should point out he's definitely a busy guy with his other projects, but nevertheless, Sam Altman, who had been the chairman of Oklo, stepping down from that role. Something to keep an eye on there as the shares move lower here in the after-hours trade.
Yeah, Dow Jones, though, saying Oklo to continue working with Altman to explore strategic partnerships with leading AI companies, including potentially with them. So there's a little bit more to it. Hey, some earnings. Intuitive Surgical just crossing the Bloomberg terminal, folks, and the company coming out first quarter revenue slightly better than what the street was expecting. $2.25 billion. Estimate was for $2.19 billion. First quarter adjusted EPS also coming in 9 cents better than what the street was expecting, coming in at $1.81 a share. And then some outlook sees fiscal year gross profit margin 65 to 66.5%. Had seen 67 to 68%. We are seeing the stock taking a bit of a hit, down about 5.8% here. So that has to do, one would assume, with that outlook.
Okay, I had one of those surgeries with one of those intuitive robots.
The Da Vinci.
Oh, yeah, me too.
Yeah, it was great. And by the way,
it was great because you were awake for it.
Well, no, I was. No,
that's what I'm saying.
I had a real thing. And I should point out, my doctor was a pioneer in that. Not to brag or anything, but he was a pioneer in the Da Vinci.
That's some good flexing there.
Good to know.
My valiant fight.
Nice job.
Hey, while we await Tesla, we're hearing from some other companies now. Capital One with the results. First quarter adjusted earnings per share beat estimates. First quarter net interest margin coming in just shy of estimates at 6.9%. Capital One first quarter adjusted EPS coming at $4.06, beating estimates of 3.6%. Shares right now down by about 0.9%.
Tesla earnings crossing the wire. Adjusted EPS, a big miss, 27 cents a share. The street was looking for 43 cents a share. Revenue in the most recent quarter, $19.34 billion. That's a big miss. The street was looking for $21.37 billion. The company also saying that the tariff landscape is going to have a larger impact on its energy unit. It's also saying that it's difficult to measure the impacts right now of global trade policy, and also saying that its rate of growth will depend on a variety of factors and that it will have to revisit its 2025 guidance when they give their second quarter earnings update in about 3 months' time, guys. You see the shares only fractionally lower, of course, down about 51% since that all-time high back in mid-December.
Well, here's a fun sentence from Tesla, right? Sufficient liquidity to fund our product ramp up. You never like to get, you're glad that they have sufficient liquidity, but to sort of preempt it, to say that statement always gives you a little bit of angst as to why. And then operating income for the first quarter coming in $399 million, estimate was for over $1 billion.
I'm going through the release here. You guys mentioned the automotive and energy markets continue to uncertainty there, but the note saying this dynamic, along with changing political sentiment, could have meaningful impact on demand for our products in the near term. We remain committed to expanding our business model to include delivering autonomous robots across multiple form factors and use cases, powered by our real-world AI expertise, to our customers for use in our factories as we navigate these headwinds. I know you guys are going to be speaking to Ross Gerber soon. He wants to hear more about cars and less about the autonomous robots that the company is working on.
I'm just going to say, and also in that release, the financial summary, I mean, there's a lot of declines year over year. Total revenue decreased 9% year over year, $19.3 billion. And they talk about the items, decline in vehicle deliveries. And they talk about, in part due to that Model Y update. They talk about reduced vehicle average selling price due to mix and sales incentives. They talk about currency, higher regulatory credit revenue. I mean, stock, I don't know. It's like investors trying to make sense of it.
Yeah, and this gets to this idea, sort of what's in the pipeline as well. I mean, one, I just want to point out to Alex's point too. I mean, we're talking about a company, when we talk about liquidity, remember, this almost feels like deja vu. Remember, a few years ago, that was all the talk. Every quarter was how much cash is it generating, how much is it burning. We're seeing that drop in free cash flow, at least in the most recent quarter. And of course, now that they would put out a statement about that, a fiduciary duty to do so, I think you have to at least be mindful of that if you are an investor.
All right, lots of questions, I'm going to guess, on that analyst call. So looking forward to seeing what more color we get around their business. All right, guys, that's a wrap. Our cross-platform coverage, including Tesla earnings on radio, TV, YouTube, Bloomberg Originals. We know we're all going to continue talking about Tesla. All right, that's a wrap. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, folks, we're watching shares of Tesla bouncing around a little lower, a little higher. I'm just looking at our live blog that's tracking everything that's coming from that earnings release from Tesla. And our team, Dana Hall, who you know covers Tesla so closely, has for many years, says this is not a bullish outlook from the shareholder deck. Uncertainty in the automotive and energy markets continues to increase as rapidly evolving trade policy adversely impacts the global supply chain and cost structure of Tesla and our peers. This dynamic, along with changing political sentiment, could have a meaningful impact on demand for our products in the near term. But they say committed to expanding our business model to include delivering autonomous robots. You were talking about this, right? Across multiple form factors and use cases powered by our real-world AI expertise. Talk about headwinds, and they talk about navigating them. We'll see, I guess, what will happen.
Well, let's talk numbers, too. Just a reminder, first quarter revenue really came in significantly below estimates at $19.34 billion. Estimates were for $21.37 billion. First quarter EPS, a big miss on the bottom line, too. I should say year over year, a big miss compared with last year, 12 cents versus last year, 34 cents. A couple other headlines here. Gross margins for the first quarter did come in above estimates at 16.3%. But first quarter operating income, a big miss, down to $399 million. Estimates were for $1.13 million. First quarter free cash flow missing at $664 million. Estimates were for $1.08 billion. A couple other headlines here, Carol. The company's leaving out a return to growth forecast from its earnings report, still sees robotaxi volume production starting in 2026, and localized manufacturing provides advantage. As a reminder, this is a company that has facilities in Texas, California, China, in Germany.
No, it's a really good point. I think that leaving out return to growth forecast from the earnings is a big one. We put a red sticky on it, highlighted. The other thing is something Alex Steele of our TV team highlighted, this idea that there's sufficient liquidity to fund our product roadmap. Like, you want to understand how the balance sheet is. The stock right now is just down about 0.6%. Hey, let's bring in Craig Trudell, Global Autos editor and the editor of the Hyperdrive newsletter. He is joining us from London. Craig, you know this company really well. What's surprising? What's interesting? What should we take note of?
Well, I think everyone was bracing for these numbers to be weak, and they're even weaker than folks expected. And I do think that you've hit the nail on the head with highlighting, for them to step back from saying we expect to return to growth this year, and to say we'll revisit our guidance in the second quarter. I mean, they're now part of a much broader group of companies that are having trouble getting a handle on the outlook for their business as a result of all the uncertainty under the Trump administration. But I think it's particularly remarkable to see that out of a company that is so synonymous with a person who is so closely tied to that administration and Elon Musk.
Far be it for me to ask you to explain stock price movement, just especially after hours on a day such as today, Craig. But given the fact that there were so many misses across the board for this company, whether we're talking about first quarter adjusted EPS, first quarter revenue coming in shy of estimates, the company leaving out a return to growth forecast, why aren't we seeing the stock react more? Was this all priced in?
I think it speaks to a sort of let's wait and see until what Musk sort of has to pull out of his hat later this evening. You saw a lot of analysts sort of giving their takes on in their previews going into these earnings, talking about what the numbers don't even matter, or even some debating that, where I found it kind of comical that in Morgan Stanley, Adam Jonas's note earlier today, of course the numbers matter, he said, but here are the things that matter more, which is ways that Musk can sort of wave the bright shiny objects to get people to look past these numbers and something to believe in, and oftentimes it tends to be autonomous vehicles for Tesla. Yeah.
Well, is it Optimus? Yeah. Is that the bright shiny object? Is it a robo-taxi event in June where they're going to actually start these robo-taxis? What are the bright shiny objects?
Yeah, I mean, I think the robots, I think even Musk is a little bit, conservative in terms of talking about when that's actually going to be ready as a product, for external use. For the time being, it's, an internal project. But I do think that, launching a service in Austin, in June is absolutely something that Musk has sort of laid down as a marker for progress on that front. But I think it's going to be difficult to parse, just how much that sort of puts, Tesla on some pedestal, or are they, in the end, just catching up to a company like, say, Waymo, that has been, deploying in cities, kind of increasingly all over the U.S. and has been at this for years now. Does Tesla actually have a generalized solution for self-driving or not? And that's still going to be an unanswered question, I think, as of June, if I was a betting man.
Just to throw a couple more numbers at you, Craig. Deliveries of the Model 3 and Model Y were down 12%. Other models, the bucket that includes the Cybertruck, were down a whopping 24%, far outpacing the decline in production of down 16% for Model 3 and Model Y, and down 18% for other models.
Does that mean the Cybertruck is not selling?
Is that what it means?
The Cybertruck is not living up to expectations in the least. I do think that the Model S and Model X, are probably sucking wind even more because they have been around longer. But in terms of the expectations that Musk set for the Cybertruck, he talked about this being maybe a model that would manage, something like on the order of 250,000 units a year. They're not even coming anywhere close to that. And I do.
A little bit of a freeze, and we'll see if we can get back to Craig
Trudell's in London.
Yes.
It's a little later there. Got to send the Starlink. Got to make sure the Starlink works. We're going to pause.
We don't know if it's Starlink. It's not Starlink.
Yeah, but
Hey, listen, Tesla shares are up about 1.5% as we speak. Just to rehash, folks, because we've seen the stock kind of bouncing around. Little movements, a little higher, a little lower, but right now about 1% higher. Keep in mind, Tesla signaling some caution, backing away from an earlier view for 2025 sales growth and pledging to revisit its outlook next quarter, a sign that tariffs, an aging vehicle lineup, and the backlash against CEO Elon Musk are having an impact on the EV maker. We've rehooked up with Craig Trudell, Global Autos Editor at Bloomberg News. He's with us from London. Craig, the stock continuing to bounce around. If Elon gets on the call today and say, listen, folks, I'm coming back in a month, I'm coming back in 2 weeks, how does that change things potentially, or not at all? Are we still having some troubles?
Yeah, working on.
Craig, there you go. We gotcha.
Sorry, guys, I lost you.
All right, let's try one more time. Can you hear us now, Carol?
Craig, can you hear us?
Can you hear us? Carol, can you hear me?
Yeah.
Oh, good.
Okay, good.
Hey, listen, it happens. This is our world. Hey, but what I wanted to know is that if for some reason on the call with analysts that Elon starts to hint, hey, listen, I'm going to come back in a month, or I'm going to come back in a couple of weeks, does that perhaps change how people, investors, analysts will think about the outlook for this company? Will it make a difference?
I think it may be helpful from a narrative perspective, and we know that Tesla is very much a narrative stock, but I guess I would question that narrative and poke at it a bit and ask, is Elon Musk going to step back from politics in a meaningful way? It's not just
we're having some issues with Craig's connection. We're gonna let him go and let our team try to fix that. I do want to talk a little bit about where Tesla stock is, and Carol, it's kind of all over the place. As Craig said, it's kind of wait till we see and hear from Elon Musk on that earnings call. The numbers, though, not great. Far from great, actually. At first quarter adjusted EPS, a big miss. So on the bottom line, 27 cents a share. Estimate was for 43 cents. First quarter revenue coming in below estimates at $19.34 billion. That's a miss by $2 billion. The company also leaving out a return to growth forecast from its earnings report.
It's interesting, too. Ed Ludlow pointing out profit expectations. We just talked about this with him in the last hour. Profit expectations for Tesla, if you look at the functions on the Bloomberg, they had come down sharply in the last month. So the expectations about this quarter for the company had really come down a lot. So Ed's saying many got what they expected in the data. So there is that. The other thing is Ed pointing out that there's no mention of Elon Musk in the deck. And so a lot rides on the call and what he will or will not say. So again, we've talked about folks saying, Elon is somebody who always has a full plate, but there are those who say he's too distracted. His work in the government is also not necessarily good for the company. And so they're saying kind of come back.
Yeah, well, this isn't the first time he's been away from Tesla or focused on other companies. He's got many other companies, including Neuralink, XAI, the Boring Company, and others. One thing I did want to mention, Carol, because we've spent a lot of time talking about Tesla's product lineup and the concerns that some analysts have that it's starting to get a little old. The company has changed the status of its Cybercab, Tesla Semi, and Roadster, with the first two moving to construction. So that's the Cybercab and Tesla Semi moving to construction. Right. The long-awaited Roadster has shifted to design development. Oh, so that sort of offers of where they are in the timeline. No, significant dates that they're mentioning at this point, but maybe we'll get some details on the call.
Stock right now, again, little changes, but right now unchanged as we speak. Again, I'm looking at our live blog, and one thing that I thought was interesting is that the company said it achieved a fourth sequential record for Powerwall deployments, crossing 1 gigawatt hour for the first time with supply continuing to be constrained. Our Michelle Ma, CleanTech reporter, says it seems energy generation and storage continues to be a bright spot for the company, although tariffs, quote, may cause market volatility and near-term impacts to supply and demand.
Liam Denning of Bloomberg Opinion pointing out that if you strip out regulatory credits, net interest income, and also adjust for the other loss, and operations generated a pre-tax loss of around $200 million in the first quarter. So he's doing some accounting there, but the regulatory credit's a big part of the business.
Listen, this stock...
Dana pointing out, this quarter, the company still makes millions of dollars selling regulatory credits. This quarter made $595 million doing it, down from $692 million in the previous quarter.
Interesting, right?
Yeah.
So got to remember, factor that into their business. The stock, as Tim was pointing out earlier, down 41% year to date, more than 50% or roughly 50% from its high. I think it was late last year. Right?
Yeah, 50%. Yeah, exactly.
Right? We saw quite a run up after the election, and a lot of expectations about policies out of the Trump administration, and that was going to be good for business, good for certainly those that were maybe close to the president in the White House, Elon Musk among them. And then we saw really a pullback this year as his involvement with the government. In some ways, there was certainly a backlash against that, not just here in the United States, but globally. And that played out into demand for cars or lack thereof.
Hey, just a reminder, watching shares of Tesla, they're pretty much flat right now, waiting for that call to start, up about 0.4%. Tesla's not the only story in the after hours. Fortunately, standing by, we've got Charlie Pellet with an update on everything happening after hours. Hey there, Charlie.
Well, hello there. Indeed, Tesla, the big story, but yes, lots of other stories going on after the close of trading. Let us recap, reset, and bring you up to date on Tesla, the big stock story after hours. Tesla backing away from an earlier view for 2025 sales growth. It is also pledging to revisit its outlook next quarter, a sign that tariffs, an aging vehicle lineup, and the backlash against CEO Elon Musk are having an impact on the electric vehicle maker. Craig Trudell is Bloomberg's Global Autos editor. He was interviewed moments ago right here on Bloomberg Business Week Daily.
They're now, part of a much broader group of companies that are having trouble getting a handle on the outlook for their business as a result of all the uncertainty under the Trump administration. But I think it's particularly remarkable to see that out of a company that is so synonymous with a person who is so closely tied to that administration and Elon Musk.
Bloomberg's Craig Trudell. Indeed, Tesla shares just dipping lower now, down 0.4%. Have been higher just a couple of minutes ago, but right now looking at a loss for Tesla after hours as we await the conference call, down now by about 0.3%. Big day for the U.S. equity market. Let me put big in context with the Dow, the S&P, NASDAQ all surging today. The S&P 500 index up 2.5%, up 129 points. Dow Industrials up 1,016, up 2.7%, and NASDAQ up 429, up 2.7%. Again, the S&P up 2.5%. Best levels today have been up by as much as 3%. 10-year 4.39%, with a 2-year 3.81%. Spot gold today did move lower. Spot gold down 1.2%, 33.81 the ounce, and West Texas Intermediate crude up 2%, 64.31 a barrel. Again, recapping after hours, Tesla shares now trading lower after earnings as we await the conference call, down by 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And again, just to rehash our big earnings story, Tesla, it's just down about 0.5% as we speak. And keep in mind that going into earnings in today's regular session, we did see the stock up about 4.6% ahead of earnings. So considering what our Craig Trudell said, not a great report.
No, not a great report.
And this is on reduced expectations. Yeah, I'm kind of a little surprised that the stock isn't down a little bit more.
Yeah, we're going to talk to Ross Gerber of Gerber Kawasaki in just a minute. The company Tesla, that is, backed away from that earlier view for 2025 sales growth and pledged to revisit its outlook next quarter. It's a sign that tariffs, an aging vehicle lineup, and the backlash against Elon Musk are having an impact on the EV maker. Adjusted earnings of 27 cents per share for the first quarter. That was below the average analyst estimate. The company also omitted an earlier prediction that sales would return to growth for the full year, saying instead that it's, quote, making prudent investments that will set up the vehicle business for growth. That will depend on factors including production increases and the, quote, broader macroeconomic environment.
And it did put out that caveat that it's going to revisit its 2025 guidance when they give their second quarter update. I mean, to be fair, we've heard from, some CEOs saying, I keep going back to United, laying out two different scenarios in this environment with tariffs, with a slowdown in U.S. growth or even global growth. I mean, this impacts a company in one way. If you don't have a slowdown in growth, and maybe if tariffs ease, then it's a more upbeat outlook. And Tesla has a couple of different things to layer on top of it. Right?
It does, but as Ross will tell us in just a minute, it's about the cars and not necessarily about those Optimus robots and the robotaxi that is set to debut in a few months in Austin, the Cybercab. We'll see what happens. Or that's not the Cybercab, rather, but what they're doing with autonomous vehicles and a robotaxi in just a few months, because this is something that Elon Musk has talked about for years.
They talk about more affordable models on track for the first half of 2025, right? So this has been one of the holy grails. I guess it's kind of safe to say that Elon and Tesla have promised for year after year after year that this was the way that the numbers change even more so at the company, right? Reaching a wider swath of consumer. And so let's see what we get in terms of color on that.
Ed said something when we spoke to him earlier about what is happening with regard to Elon Musk and his own future and what he's indicated about where his interests lie right now. That really piqued my interest. He said there's concern about being more interested in XAI at this moment. So if we do see Musk, and there was optimism, on some chatter that I saw online earlier, is optimism about him leaving the government and going back to Tesla. That would be seen as a tailwind for the company, certainly. Dan Ives at Wedbush has talked about this being a code red moment for the company. Like, he needs to return to Tesla. But is he going to do that, or is he going to be interested in something like XAI or X? And is his time going to be spent there? Perfect question to ask our Ed Ludlow. He is, of course, back with us, and he is co-host of Bloomberg Technology on Bloomberg Television every day at 11 a.m. Wall Street time. So, all right, Ed Ludlow,
I mean, hi. I mean, a lot of questions. We want to, before we get into if Elon comes back, where he goes, top of mind for you on this report, because not great.
Yeah, not great. I mean, you can use whichever metric you want. Operating income is down 60%, 66% year on year. But this was all telegraphed, right? Like profit expectations had really come down. Profit is down. They missed on the top line as well. And quite clearly, it's an acknowledgement that whether it directly impacts their own pricing or not in the supply chain, evolving trade policy, as they call it, is having an impact in all jurisdictions around the world. I don't know if you guys saw the specific commentary around China, though, because the headline is Tesla omits guidance in its report, right? It didn't include that normal boilerplate about the growth target for the year, and it said that it's just not able to or revisit in the second quarter. But there is a lot of reading between the lines that we can do about its commentary on the Asia-Pacific market and how localized its supply chain in China is. I just thought that was really interesting.
I'm just blown away by these numbers, Ed, and the lack of reaction that we're seeing from the stock. Is that because,
well,
I don't know, what do you think? Consumers, the investors are kind of waiting to see what happens on the call, or it was priced in? But because I got to tell you, the analysts were pretty far off with what expectations were.
Yeah, I mean, this is like, in the after hours trade context, the definition of treading water, isn't it? Until
it is.
We get to the call. I mean, like, there's loads of ways you can look at it. It's a stock, as you pointed out earlier, like down 40% year to date, or down 50% from its latest high in December. Like, it's pretty downtrodden, although its multiple was still slightly eye-watering. I think that you also give credit where credit's due, right? Tesla has given us some granular information about how it feels it can handle this scenario. It basically explains that in 3 jurisdictions, America, the European Union, and China, it has localized supply chains that build vehicles for that market. It gives them a competitive cost structure. Clearly, margins have taken a hit, but this is why I flagged the language specifically about China. They acknowledge it is the most competitive EV landscape, but one, they feel that they are strong there, that they have a cost and structure advantage, and 2, if EV adoption generally is much better in China, there's more competition, it will be a net positive for Tesla in the long term.
How do you even compete with BYD, Xiaomi, Huawei, and the other companies in China if you're Tesla right now? You're not competing. You're not competing on the vehicle, because those vehicles, from what I've gathered, are pretty advanced, Ed.
So I clearly, keeping costs low, the price of the vehicle low in a difficult environment is something that Tesla's been willing to do. Basically, we will listen out whether Musk or the CFO says, yeah, we've been pretty happy to sacrifice margin in order to stay competitive there. I just blogged in the Top Live blog about the political language, which the wording is that demand is being hit by, quote, changing political sentiment. We talked a lot on this program about how soft the sales and deliveries numbers were for the first quarter overall. But the assumption is that manifests itself in the United States, right? Maybe people don't like Musk's politics and association with Trump. But you also should think about it from the point of view of the Chinese consumer. And this is what I'm trying to sort of read between the lines on in the messaging in their deck, which is that there is evidence that the Chinese consumer will champion a domestic player.
Oh, yeah, of course.
Because of the politics. They don't want to support Musk or Tesla.
Look what's happened with handsets and the way that the Chinese government has moved away from even allowing government employees to have Apple devices. You see products from Huawei, for example, doing very well in China compared to what's happening with Apple over the last couple of years. Is it a similar situation when it comes to EVs?
Yeah, I think so. That, clearly China has a response to US or American tariff or trade policy, and a part of that response is to champion domestic names. And again, Tesla acknowledges verbatim it is the most competitive EV market in the world, but they basically give some fighting talk, is how I put it, saying that if the overall health of the market is good in China, then we benefit too. I think it's what's really interesting as well is, like, when you talk about trade war or tariff, you're thinking about it from the point of view of America, right? But there are buyers of energy storage products in other jurisdictions. And the point that Tesla makes explicitly is that they've got a really healthy and strong supply chain in Shanghai for the energy storage business to sell into the Asia-Pacific region where there is still demand. And it'd be interesting if they get questions about that.
Hey, one of the things, I just want to go back to the live blog, which you were posting in, and we just kind of love going through it. Dana Hull, who you know well, of course, covers Tesla as well, is talking to investors and Wall Street analysts. And Seth Goldstein of Morningstar says it's a positive report in terms of the outlook. The more affordable vehicle is still on track and entering production by mid-year, and the robo-taxi testing is still on track. Goldstein wants to hear more on the call about how Tesla plans to weather the tariff impacts. Will they raise prices? Whoops, I just lost it. Will they raise prices on their existing vehicles, and if so, by how much? Having said that, I want to go back to China if I can for a moment, because does Elon have a special in? You know this so well, that when he built that factory, man, he did it so fast. Like, we know that when companies from outside China, non-Chinese companies try to do stuff, it takes a while, a lot of negotiating. He did this so quickly. So I do wonder, does he have some kind of special in China?
Well, he got a lot of help from the Chinese government, and financial and otherwise. You know, I think that it's a jurisdiction where if you want to move quickly and the Chinese government will allow you to, you can. You know, the cost of doing business in America is higher. Regulation is more cumbersome. There's a lot more red tape, and that's part of the story.
But my point is that China wanted him there, right?
Yes, at the time. And again, this is why I flagged that changing political landscape quote, not necessarily because there are American buyers of cars that say, I don't want to be associated with Elon Musk. I mean it from the other point of view. You don't, if you were a Chinese consumer, you don't want to be seen championing, a key ally of US President Trump, who is subjecting that nation's economy to tariffs and other trade restrictions. I really think that there's a good chance that Musk or someone on the call will address that specifically, because China is such a key, not just volumes market for them, but it is the biggest EV market in the world. One quick footnote, you guys did such a good job talking about BYD earlier on both TV and radio, but Tesla put a little footnote in saying that they launched FSD supervised in China, and it had a little asterisk next to it, and they said that it was well received, a good reception, they said. But we don't really know what that means, and we know that the Chinese consumer also has high expectations of the capabilities of the vehicle, what is included or what you pay for in terms of software upgrades.
Yeah, reminder, I think BYD's self-driving feature is called God's Eye, to give you an idea of how, they're thinking about self-driving.
That's interesting.
Yeah.
Hey, one last question, though, I want to ask you on China. I mean, does President Xi want Tesla in China? In other words, it's a really well-known brand, a high-end, right? Like a luxe vehicle. Like, do they want that presence in China?
I don't have the president's cell phone number, and if I did, I'd try and ask him. But I think that the reporting, which is extended to Tesla, the prohibition on government employees interacting with the vehicle because of security concerns.
Yeah.
Championing domestic smartphone handset makers over, say, having an iPhone in a government or government-owned entity work context. We know about that. And so I think as things are escalating, and clearly that's the language reflected in the Tesla deck, the China is not going to be prepared to champion Tesla over its domestic names, but it has a huge footprint there, many employees. It commits a lot of capital to that market. That's the whole point of why this is so complicated, as we kind of review the global trade order. Gosh, I've always wanted to say that on TV. Cool.
Well done, well done.
Hey, do you want to note, Dave Mazza over at Round Hill Financial weighing in on our live blog, saying that a lot of negative seems to have been priced in if the Tesla numbers were that bad and the stock isn't tanking. So, yes, it's after hours. Yes, we're waiting for the earnings call. But the immediate reaction, as Ed said, just treading water, up 0.7% right now.
All right, so Ed Ludlow, you know this company so well. What would you be asking on that analyst call? What do you want to know?
The good thing about public company earnings calls is that there is a transcript and a record of everything that's been said before. And I remember on the earnings call prior to when I went on leave in November, Elon Musk saying that he would use his relationship with the upcoming government at that time to push for a federal pathway to regulate robo-taxis. Now things are much more difficult for him. He gets difficult questions about how focused he is on Tesla his role at Doge. The reporting is he made an appeal to the president about tariffs. I wonder if he will speak as candidly about his relationship with the president and what he thinks he can achieve on behalf of Tesla shareholders now that things are more difficult than they were back when he made that comment on federal regulations for robotaxi. If I had the opportunity to ask a question, I guess that's how I'd ask it.
Great stuff. Always, always, always. Thank you so much giving us a preview earlier and then breaking it down with us. Can't tell you how much we appreciate it. Ed Ludlow, he is co-host of Bloomberg Technology. As I said, 11 a.m. Wall Street time on Bloomberg Television with Caroline Hyde. Catch him Monday through Friday.
Hey, let's bring in our Bloomberg News Detroit Bureau Chief David Welch, who's been watching these numbers closely. Just a reminder for anyone just joining us, Tesla sort of missing all across the board, but shares down higher by 0.8% as we await for details from the call. First quarter adjusted EPS and revenue missed estimates. Tesla backed away from earlier forecasts for sales growth this year. New vehicles, though, are on track to start production in the first half of this year. Tariffs have hit supply chain and may have been a meaningful impact on demand. I do want to bring in David Welch. He joins us from Detroit. David, at first blush, is not a great report. Or is there anything in here that should leave the bulls optimistic?
They said that the Model 2, the affordable Tesla, is on track, and that's what this company really needs to kind of get growth going in the vehicle business. Whether or not you believe that they're going to be able to have the cybercab, this robo-taxi that's going to generate a new kind of revenue, that's sort of a battleground issue when it comes to Tesla. But their vehicle business is stalled out. The products are stale. The Cybertruck is a niche vehicle. We haven't seen a Roadster or a semi-truck that's really going to, none of that's going to sell in big numbers. So you got to rely on, let's call it the Model 2. And he said it's on track. I think investors are probably taking some encouragement from that. Maybe that's why the shares aren't tanking. And, I think one of the analysts you guys mentioned on the previous segment saying that the price on this miss was expected and baked in. I think there's probably some credibility there that investors were expecting the worst, and this is about what they were expecting. So we'll see what it does tomorrow morning. That's always interesting to me because aftermarket trades can be a little bit odd at times, and then sometimes you see something very different the next day.
No, that's a really good point. And, as Tim keeps reminding us, stock down more than 40% year to date, down 50% from that December 17th high. So, man, it's had quite a move to the downside. At the same time, though, it's not like they came out and said, all right, it's been bad. But guys, they didn't try to sugarcoat it. And so there is something to be said for that, right? To kind of acknowledge that the business isn't necessarily where they would like it to be and that there are real factors that are impacting it. Is that fair?
Yeah, I think it is. And, often when Tesla's had a slowdown in growth, which we've seen really for the last 5 quarters now, plus, and, Elon Musk comes up with a different story, and it's been autonomy. And I'm not saying it's just a story. It is something they're really working on. But the bears always look at that as, okay, he's trying to distract us from the fact that the core business of selling electric vehicles is not doing well. They didn't do that this time. They did say, hey, these other businesses, Model 2, Cybercab, this stuff is still on track. But what you're seeing out there in the vehicle market, either because of the political environment or cost from tariffs or just a more competitive landscape that's slowing things down, that's all there, and it's something we need to work on, which that is sort of a more, hey, play it straight up the middle and tell it like it is. When it comes to that business, then I think we've seen from them. I think Tesla's always tried to look to the next big thing, which is what's made it a very valuable company. I think it may have served them well just to say, yeah, it's a tough spot for the core business right now.
You mentioned the political environment. In the statement that we got from the company, it says that the political sentiment was cited as a risk. It doesn't mention Musk, but it does acknowledge changing political sentiment, which, quote, could have a meaningful impact on demand for our products in the near term. They say in the near term, David, and I assume that changing political sentiment has something to do with Elon Musk's activities at Doge, maybe his outspoken nature when it comes to what happened in Wisconsin, and then also what happened in Germany, the UK as well. He's weighed in on politics around the world. Why do you think it's citing a risk in the near term rather than in the long term?
That's a good question. I mean, maybe they only want to go out so far with some, for lack of a better term, guidance there or outlook. Maybe they see political environment changing here. Maybe they think that if once Elon steps away from Doge, he's not going to do that forever, that maybe that lessens some of the political sentiment against him. Look, there's some research I've seen. It was actually from a Republican think tank that said, most EV buyers in the U.S. are, somewhere left of center and leftward, or Democrats, I think is actually how they put it. And it was well over 2/3, as I recall. If that's the case, and Elon Musk is aligned himself with Donald Trump, then the core EV buyer has some reason to maybe look away from the brand. At the same time, you might think some conservatives who didn't look at EVs would now look at Tesla vehicles, and you might get some balance there. But the company's acknowledging that it's having an issue for them. And in terms of demand, and it probably does in China as well, right? And we've sort of seen whenever there's a trade war or political strife, suddenly brands from that country that's in some kind of tussle with the Chinese government has a tough time there. We saw it with Korea a couple of years ago. Hyundai, Kia had a tough time in the Chinese market because the South Korean and Chinese governments were arguing. So these things do matter.
Hey, one last question, because they did talk about their energy business a lot, it feels like, in this release as well, the energy generation and storage. And just looking through their balance sheet, I mean, in terms of revenue, obviously it's much smaller in terms of contributions to their overall revenue picture. I think about 10% in 2024 versus almost 90% of the automotive area. Having said that, it seems to be certainly a lot more profitable, right? And in terms of margins, what do we need to know about the energy generation business at Tesla?
Yeah, that's a pretty solid business for them. I think it is maybe a bit underrated because the margins are pretty good. I just don't think the way investors look at the company, they look more at the core business because it's so big, and they look at these future developments, Model 2, and of course Cybercab. But the other thing, if I'm looking at Tesla stock, one thing that worries me is sales of EV credits were down 100 million versus the same quarter a year ago. And without selling the clean air credits to other car makers, they actually, if you net that out and you net out interest income, operating income was negative 200 million. So you need those, and that's pure, it's almost pure profits on those credits. So without that, the income statement doesn't look as good, and that's in the decline. That could be in the decline because other companies who buy them have EVs and don't need to buy as many.
Right.
And it could be under further pressure because the Trump administration could water down clean air rules.
All right. Good to check in with you. Craig Trudell. I'm sorry. Forgive me. David Welch, of course, our bureau chief for our automotive group, joining us here on Tesla Earnings. David, thank you so much. Really appreciate it.
Hey, we're getting people from all over the world and all over the country.
Yeah, bouncing around. So forgive me.
Let's go back to California, though, and bring in Ross Gerber. He's president and CEO of Gerber Kawasaki Wealth and Investment Management. They manage about $3.4 billion. And according to the most recent filings, they have a stake in Tesla worth about $63 million. Ross joins us from Santa Monica. Ross, good to have you with us after earnings, ahead of this call. I want to go to threads that you sent earlier. You said, before the numbers came out, here's what you wrote. I've done Tesla calls for 11 years. This is the worst performance I've seen in Tesla's history. I get Elon will tell everyone about trillions of total addressable market and robots taking over the world. Anything to get you not to look at the facts. Did he do that in the report today?
He hasn't started. He hasn't started yet. I mean,
but I mean, the report no, but the report came out. Like the numbers came out.
Yeah, I mean, the numbers are the numbers, but I think it's really about the conference call where he has the opportunity to change the narrative to what he wants it to be. The numbers are clear as day that automotive sales are down 20% and things aren't going well, and earnings are down substantially from the pace and cash flow from what it was doing over the last several years. But you can see it mostly with auto sales as well, just have plateaued and started moving lower. So there's a lot to be concerned about in the numbers that we've seen already. And that's why I think he's going to use the conference call to try to move the narrative away from what's really happening at the company.
What's the narrative that would make you, I don't know, more upbeat about it? I mean, where are you? Because, we've talked with you where you love this company. There were times you were certainly concerned. You've owned cars. I'm assuming you still own some Teslas. You've owned stocks. You've added. You've sold. Okay, so you've got the Cybertruck. So where are you in terms of your view on Tesla, the company, and maybe on Elon as head of this company?
Well, I get in my Cybertruck and I'm kind of embarrassed. And fortunately, I live in Santa Monica where everybody else has a Tesla, so they can't throw rocks at me. But it's like people drive Teslas with their heads down because they're embarrassed by the fact they drive a Tesla because of Elon Musk. And that's how bad the brand value has declined over the last year. And so it's really sad to me. You know, I love the company, and I personally believe climate change is one of the most important issues that we solve. I just survived the Palisades fire barely. And I can tell you, after looking at 60-foot flames a block from my house and almost destroying everything I own, that if you're not worried about climate change, you should be. And Tesla is the solution for so many of the issues that we can address, like EVs in cars, and then storage for utilities and creating energy through solar and wind. And so that's why it's hard for me to let go of Tesla, because I still think it's the best solution for an enormous problem. And people want to solve this problem, and people are buying EVs, but it's simply because of Elon that they don't want Tesla. And so I partially want to believe that if there's changes or better marketing or a different CEO or some way that the company can separate itself from the negativity that's created by Elon's actions, then Tesla maybe can recover and get customers again. But you know, that hope is fading as the time goes on.
How much has your stake in Tesla shifted in terms of where it was a couple of years ago, how optimistic you were about the company versus the roughly $63 million that you have in the company right now? In other words, are you putting your money where your mouth is?
Yeah, I mean, we've been sellers, and you can look at our public filings. We've been sellers of Tesla for almost 3 years now. So since 21 at the high, we've been, you know, on and off sellers when we have the opportunity, because we had so much stock. So it used to be, you know, 10 to 12% of our overall assets. It grew so much for us during those days. You know, 5 years ago was when it really started. And so 3 years ago when it peaked, over 3 years ago, you know, it was really around the purchase of Twitter that we became pretty concerned. And then that got us to lower our stake. And then the divisive comments and anti-gay rhetoric, and then obviously turning into total right-wing MAGA, got us extremely concerned about the damage to the brand, and we continued to lower our stake. So we've sold about 60% of our, at where we are at the high point with Tesla, we sold about 60% of our shares, and we're still active sellers of Tesla when we have the opportunity.
When would you become a buyer again?
Either by price, like if the price declines substantially to a valuation that makes sense for the company, you know, so if it started trading at a reasonable multiple, which would be a substantial decline for Tesla, you know, it could drop about 50% to get to just a reasonable multiple, then I think I would look at Tesla again. But it would also take a shift in strategy to trying to actually market and sell their products instead of turning off all the potential customers of the world. So that's a big issue. Until they actually want to sell a car, I don't see how Tesla gets better. But right now, they just want to talk about things they can't sell because they don't exist. But the products they have, they're doing everything possible to convince you not to buy them. And that's the problem I have.
Ross, I feel like for a long time, Tesla was the North Star when it comes to EVs in the United States. And everything that's happened over the last few years, and certainly Elon's involvement with the Trump campaign and White House, that has certainly changed things. But it's also the Trump White House and administration in terms of what they may do going forward or lack thereof when it comes to EVs. It's an interesting day where all of a sudden we saw maybe some help for the solar industry. So trying to get a handle on, I guess, what's coming out of the administration. At the same time, Tim and I are obsessed with what's coming out of China in terms of their advancement with EVs. How critical, as you look at things, yes, on a company basis, but bigger, broader, that this moment in time could be really crucial, whether it's for Tesla, but also the U.S. involvement in EVs going forward?
Yeah, you're kind of hitting this like really big issue that's about to happen, which is the fact that China is now building better EVs than anybody. And BYD in particular is really getting good at this. And they're making tons of low-cost EVs. And we're in the midst of a trade war created by Trump, which if you kind of understand the way Chinese people think, they're going to stick with their brands now versus American brands. So if you're in China today, driving around in a Tesla with your iPhone isn't cool. And it used to be cool. And so Chinese consumers are going to, vote with their vote with their Chinese money, and they're gonna buy Chinese products. So that's going to be a big problem for companies like Apple and Tesla, because it's just nationalism. Secondly, the competition's good now. In the old days, we used to say like Tesla has no competition, like there was nothing that could compare. But today, there's a lot of good EVs people can buy. So, Tesla does have competition, and I still think they make the best EVs, but, there's some good EVs. I have a Rivian. I love it. My business partner has a BMW EV. He loves it. We're seeing lots of happiness with lots of different EVs from customers. So,
here in the U.S., we don't see BYDs. We see a few Polestars.
That's right.
We don't see BYDs.
Thank God for Tesla, right?
Yeah, we see a lot of Teslas. But in Europe, in parts of Europe, in Mexico, in Australia. Yeah, a lot of these, you can find these Chinese EVs. How much of an issue is it for Tesla outside of the U.S., but not including China? So ex-U.S., ex-China, the competition from Chinese companies.
Well, a perfect antidote to this was I was just in Mexico City, and I was staying in a hotel across from the Tesla dealership, which is on the nicest street in Mexico City, which is like the Rodeo Drive, Beverly Hills of Mexico City. And a Tesla costs like $35,000 or $40,000 in Mexico, just like it does here. That is way, way, way too expensive for a traditional Mexican consumer, okay? There are BYDs everywhere. And why? People want to go electric in cities like Mexico City. It makes a lot of sense. But BYDs sell for $15,000. And so all the Ubers were BYDs that we took. Now, the BYD, it doesn't compare to the Tesla in quality in any way. But it's a cheap EV. It's perfect for the emerging markets. And I don't see how Tesla can compete because they really haven't made a car to compete in the emerging markets. And at this point, I think it's too late and they should just not deal with that market. I think they should stick with the markets that they're in and try to dominate those. But the low-end EV market is going to be brutal and BYD is going to be the winner.
Great stuff, as always, on Tesla, on Elon, and really the macro EV market. Ross, thank you so much. Take care. Ross Gerber, President and Chief Executive Officer of Gerber Kawasaki Wealth and Investment Management, joining us from Santa Monica.
Let's take a look at some stocks that are on the move today. Joining us now is Bloomberg News cross-asset reporter Emily Griffeo in our Bloomberg Interactive Brokers studio. Emily, is Tesla on your radar?
It is.
Okay, good.
It's hard to follow that wonderful interview, but at least I can give the market.
And for those of you listening, if you missed any of it, go to Bloomberg.com or check it out on the Bloomberg.
It was Ross Gerber of Gerber Kawasaki.
Yeah, or check out our podcast. Go ahead.
Yeah, talking all about Tesla's competition, basically, not just in the U.S., but globally. At least for Tesla's earnings right now, though, it seems like a lot of the negative news was priced in. Because you look at the headlines, first quarter adjusted EPS, revenue missed estimates. They backed away from a forecast for sales growth for next year. They said it's difficult to measure the impacts of this shifting global trade policy on automotive and energy supply chains, even when they have Elon Musk at the helm, who you'd think would know a little bit about what's going on, but I guess not. And yet the stock is higher right now. Not up by much in the after hours. It's up 0.3% right now, but still it seems like, at least according to what Dave Mazza, CEO at Roundhill Financial, had to say, a lot of the negative seems to be priced in if the numbers were that bad and the stock isn't tanking. He told that to Bloomberg News today.
It's little change. Like, it's really remarkable in the aftermarket.
I felt the same way when I saw these numbers come out, Emily. I was like, this is a huge miss and the stock is barely moving. Like, look, we'll wait for the call. We're doing this before the call.
Right.
As Ross Gerber reminded us. But yeah, he said check tomorrow. We'll see what happens.
Exactly.
It's still one of the worst performers year to date.
In the S&P?
In the S&P 500, down about 40%.
Yeah, it's pretty ugly. Hey, let's talk about, I think, more earnings.
Yes. So Equifax closed up 14%. It was the best day in 4 years.
This was one of your gainers, Carol,
This was
wasn't
like
it?
the #1 gainer, I think, in the S&P 500 today.
Yeah.
Loved it.
They topped profit estimates. They maintained their outlook. So they're a credit reporting agency. I guess this means that consumers' credit is looking good.
Maybe we did speak. We did speak last week to somebody. Oh my gosh, I'm blanking on the name.
Oh, we did. Help us out here, team. I can't remember.
He's in charge of.
It's been a busy week.
He's in charge of the credit rating at the three companies. So it's Equifax,
Silvio
TransUnion,
Tavares.
Silvio Tavares. Thank
Okay.
you. Equifax, TransUnion, and another one. And
He was kind of cautiously optimistic.
he was
right?
exactly that's what I was going to say. He was cautiously optimistic. He was like, the consumer's actually in a pretty good place, and he compared it with 2008, and he said we're in a much better place than we were back in 2008.
Yeah. I mean, at least for the company, Equifax still said that the tariff-induced uncertainty in the economy and falling consumer confidence is one of the reasons why they didn't raise their guidance. So they can't, completely shy away from
Northrop
tariffs.
Grumman, just got about 30 seconds left here. Not a great day.
Biggest intraday drop since 2008. It was down 15%. It paired a little bit of those losses, but they said per share profit declined by 47% in the first quarter, primarily due to loss provisions tied to their B-21
bomber.
Yeah. So this caught my eye, not just because of the stock drop, but also because a lot of defense companies have been doing really well post the election. It's still flat for the year, but it was previously up 13% year to date. It was really outperforming the market. And then